We're just about to delve into the MoneyTalk portfolio where, Phil, you made some pretty significant changes back in March. Since that time, though, it's up, correct me if I'm wrong here, about 108%, which is pretty darn good there, Phil. So maybe just give us a little context of what happened and how you're thinking about it right now.
Yes, it's been a good 3 months for the portfolio. Look, it was March was like the crash in March to April was Christmas for us. I mean, we got exactly what we expected from the beginning of the year. We had restarted the portfolio last August with a brand new $100,000. We thought that Trump's policies were going to be a disaster and the market would crash when he came up with the tariffs. That's what happened. We pounced and we bought a whole bunch of stuff we wanted to buy anyway. And we had a spectacular recovery since then. So we made way more money than was reasonably expected.
Which is lovely when that happens. And you're still actively managing it. You've got a lot of things going on right now.
Well, yeah, it's not very active. We only make changes on the show, so it's semi-active.
Fair.
We only make the quick changes when we come on the show, so we have to sit on our hands otherwise. Sometimes it's frustrating that we can't make a change. But it's fun. It's a good restriction to play under, and it's not about we don't chase fads or swing for the fences for our plays. We pick what I call bulletproof trades. That's what I love the MoneyTalk portfolio. Actually, it's full of trades that you shouldn't have to touch from quarter to quarter. They should be solid performers that are right for the time that we're trading them in. So even after this run. We just today, the changes that we make today, which are available on the site, can't get into every single one, but we collected $19,000 worth of premium from selling short puts and calls against the positions. And that's one of the keys to what we do is we always try to make an income off of our positions by selling puts and selling calls. And that strategy, I mean, think about it, $19,000 against what was a $100,000 portfolio. If we do that 4 times, that's $80,000.
Yeah.
And that's how you double up a portfolio, doing things like that.
Now, going ahead, I mean, you said the markets are feeling pretty rich right now, and I know that's. But how do you feel about the portfolio going into the rest of the year?
Again, the kind of trades we have, which are, I'll be real quick, is AT&T, Barclays Bank, Investors, Bank of Ozark, Signature Financial, which was our trade of the year, Whirlpool. Lockheed Martin, obviously Lockheed Martin's in favor right now.
Yeah.
Barrick Gold, Foot Locker got bought, in fact. So they were so good, somebody came and bought them from us. Now we got paid and we don't have the stock anymore. Nokia, Pfizer, Target, Exxon. These are not stocks that you go, ooh, I can't believe he has that, right? These are blue chips that are not negatively affected by the tariffs and not negatively affected by the slowing economy. There is $255,000 of upside potential in the trades that we have in the portfolio now.
And I'll just give my disclaimer here that people, again, have to make sure that these stocks are ones that work for their portfolio and whether the option strategies work as well, too. But again, you are all about, you talk about being the bank and collecting income as you do these things, which is exciting.